All right, guys, welcome back for another video. Today's video will be about the bearish case for Bitcoin. So I just want to, I've laid out the bullish case for Bitcoin pretty extensively, but I haven't really visited the bearish case. And I feel like, in order to give a balanced and nuanced opinion on any subject, you have to at least entertain the idea that whatever idea you think is a great idea might actually be wrong, because ultimately, the market is a probabilistic environment. There's no such thing as certainty. Even if you have a very high degree of positive outcome, there's still no such thing as a guaranteed outcome. So it always helps, just for the ease of, managing your bias, to just entertain the bearish scenario. So ultimately, what is the bearish scenario for Bitcoin? Right? It's certainly not where price is right now. I mean, the idea that because price is down, that therefore you'd be bearish on Bitcoin over the long term is not really realistic. Um, it does make sense, of course, when you think about market psychology, but it really is not a solid argument. What I would look at though is that the Bitcoin hash rate. If you see the Bitcoin hash rate, entering a period of dramatic decline, over a long period of time, entering like a very high time frame downtrend, that would be a scenario where I would start to get pretty bearish. So here's actually the current hash rate. So we're seeing, we're not necessarily seeing that scenario right here. We're seeing hash rate break out and create new highs. So it's historically, it's very rare to see hash rate make new highs and not see Bitcoin price also make new highs as well. Make new all-time highs. So also one of the significant things here, what's going on in hash rate, is that when you think about what energy prices have done recently, since this hash rate's been in a uptrend, energy prices have gone pretty parabolic. So the fact that hash rate is still climbing higher is telling you that Bitcoin miners are willing to mine. They're willing to spend nearly twice as much energy as they were a year ago to mine Bitcoin that's relatively worth half as much as it was a year ago. So when you really go down that rabbit hole and you think about it, you think, well, okay, what do the Bitcoin miners know, or what is their forward-looking perspective about their willingness to spend energy towards hash rate? Why it doesn't make sense on a surface level until you dig a little bit deeper and think about what that actually means, right? That people are willing to spend more energy to procure more Bitcoin at a lower fiat price. When you really dive down that rabbit hole, you can kind of see why this might not be the ideal area to get bearish on Bitcoin. And now, of course, if the hash rate, enters a very long-term downtrend, then that would be incredibly bearish, right? I would not, um, say for example, you see, hash rate top out and enter a decline, and even, throughout the halving and maybe over a period of several years, you see this like sort of long downtrend, where miners are just kind of leaving the market and not securing the network anymore. That could create a death spiral. So really, the hash rate is the best indicator to look at for like the security of the network. Like, a lot of people don't look at it because they think, well, what does hash rate really matter, right? I mean, what I care about is price, and if hash rate's going up and price is going down, what do I care, right? I care about price. Well, the hash rate is telling you the fundamental health of the market. If more miners are defending the market or securing the market, contributing energy towards the market, towards the proof of work algorithm, then the market's going to be healthier. It's going to be worth more. It's going to be more secure. It's going to be more globally adopted. It's, you know, and then of course on the flip side, the real canary in the coal mine is when miners stop using energy to secure the network. If that happens over a long period of time, Now, of course, you have declines like the China ban, but you saw a quick recovery. So I'm not talking about like these abrupt shutdowns and then quick recoveries. I'm talking about a prolonged and extenuated bear market in the hash rate. If you see that, then I start to get into a situation where my bias on Bitcoin starts to change, regardless of what price is doing. Right, price could be going parabolically. Like that could happen. Like you could have price go parabolic while hash rate is on a decline, and that would be a great exit opportunity, right? Because like okay, price is going parabolic, but the network is fundamentally getting less strong, less weak. I need to sell into this parabolic rally. It would be the ideal situation. But regardless of what price is doing, when the hash rate, you know, does whatever it's going to do over that long period of time, it doesn't matter what the price is doing. It's still you still got to take stock of that signal in the market. And of course, it would be something that would have to develop over a long period of time. So it'd be very difficult to read day in day out. But if you can reflect and take a step back, it's hard to identify exactly where that level would be. Maybe you have like some way to scale out of the market if hash rate enters a downtrend. So you don't necessarily have to draw a line in the sand, but you just say, okay, this is an area of weakness. If this area of weakness is breached, then I'll over a period of time reduce my exposure in the market. I think that's my bearish case for Bitcoin, right? Again, I don't have specific time frames, specific levels, but just a broad general concept of what would challenge my idea that like, okay, Bitcoin is going to become global money, right? If Bitcoin is going to become global money, hash rate has to increase. That's just the way it is. Now, kind of going into some of the other coin metrics, we've got this Glassnode thing. This is basically the Bitcoin difficulty regression model. You saw the capitulation in June come down to the 1700 level, roughly or the 1800 level, which is roughly the Bitcoin cost of production. I don't think it's any coincidence that Bitcoin capitulated into the cost of production. So, you know, because what the cost of production represents is ultimately the fair value of Bitcoin. So if of course chaos in the retail perspective is opportunity to a larger player who can use that capitulation as liquidity to enter at fair value. I mean, this is beautiful for if you're a huge player and you don't have a huge Bitcoin position and you get the largest capitulation ever in terms of realized losses into fair value. I mean, that's just beautiful. I mean, you could something to keep in mind is that you had the highest period of realized losses ever into fair value. I don't know the exact number, but it was again. I don't want to make up a number because I would just be totally speculating. But you got to keep in mind that if somebody took the other side of that trade when you had the highest realized losses, people were selling at a loss, and somebody was taking the other side. Now, there's probably a bigger player who is a little bit smarter and has more patience to buy at fair value. But always keep that in mind, right? And, if the market is capitulating, somebody's taking the other side of that capitulation. All right, now moving on to this chart right here. We've got the Bitcoin whales, two from exchanges realized prices. This is basically their average cost price. It roughly comes around this area right here, or roughly kind of the same area relatively as the cost of production. So that makes me think that these Bitcoin whales may be maybe Bitcoin miners. Their average cost tends to come in around the cost of production. So maybe that's uh, you know maybe that's a factor of these miners going full out hash power when price hits the fair value. I mean, who knows? It's hard to say for sure. It could also just be that whales just have a longer time horizon and are more patient to wait for more favorable prices. Uh, that would be characteristic of somebody who's been in Bitcoin for a while and has seen different market cycles to have that type of patience. But again, it's kind of speculation. There's really no hard and true answer on that. And then just going over to this level, we've got the Bitcoin long-term hot holder SOPR. Basically, the long-term holder daily profitability. It's collapsed. So basically, you kind of not only do you have in this area these areas of high capitulation, not only do you have uh, you know short-term holders deep in losses, but you also have long-term holders deep in losses. And the reason why that is because you have this multi-year accumulation area up here, or distribution, depending on how you look at it. But there are people buying throughout this whole year and a half period who, if they bought here, they're long-term holders, right? And they held here, they're holding over a year. And then those long-term holders are in significant downturn. It's very similar to this area right here, both from an RSI perspective, from a time frame perspective, and yeah, let's go back and visit that on price. Let's see, so you've got this was from this area right here. This is basically the turn of the year in 2021, all the way to May 2022. So you've got like a year and a half. People who bought in this year and a half consolidation, they're all long-term holders. They get run down, kind of similar to, not exactly the same, but very similar to right here, where people people bought in here, and then you have this huge consolidation, and then a capitulation that makes long-term holders capitulate. Very similar to what we have right here. Um, we can see it on the RSI. Kind of you have the RSI peaking, hitting extreme reads right here, and then the RSI, after the capitulation, hitting extreme reads right here. Got the same idea right here. So a lot of people look at this as the market cycle top, right? But from an RSI perspective, this is not the market cycle top. The market cycle top was, well, it started topping out right here, but I would use this distribution area up here as the real start of the bear market, and really this area right here, actually. So this is actually when Coinbase went public and went to the IPO, and that's when the weekly RSI kind of entered this distribution pattern, right? You get higher, lower high on the RSI right here, lower high. So two lower highs on the RSI while price is making higher highs. You get this massive weekly divergence, and then confirming this area is a high, the Coinbase public IPO, and Bitcoin's been in a bear market really ever since. Even though you had this little bit of a throw over the top, it's very characteristic. And really we've been in this period. So that was in April of 2021. So at this point, that's a year and a half ago. It's been 18 months since the market topped out. Now, if we were to do that over here, the market also topped out kind of towards the end of the year right here. Not quite exactly, but you have December. So what would be 18 months from that point in time? Well, it would be kind of well, that's exactly a year. I mean, it's hard to say exactly, but let's go back. Right. But generally, you if you mark off this top right here from December 2017 to the ultimate market bottom, it typically the final bottom is what, like almost 2 years later, a little bit over 2 years later. So you know, again, it's not a perfect analogy, but I think considering how extended price is right now, I think your most likely scenario in this case is to get some type of run up, maybe to fill a retracement. Maybe you just draw a 618 retracement, fill up there, and then, kind of sell off a little bit, but probably hold this base, right? Because this base is the capitulation base. Similar to how uh, this base right here was a capitulation base from 2018, the depths of the bear market, marked by the the extension, the RSI getting even more extended down here than it was over here, and also more realized losses being taken here than there were here. So those things in combination, uh, kind of give you a little bit of confidence where the market's at. And again, here we didn't even get weekly divergence here. So yeah, this was a capitulation bottom that ultimately held for years, but we didn't even get weekly RSI divergence. Nothing at all. But here, RSI got even more extended, had more realized losses, and put in divergence. So you got lower lows on price, higher lows on RSI, and price is actually starting to confirm that. So you got, you know, the market's starting to change around. You get higher highs taken on the weekly, this high, higher trading higher than this high, and then this week's high trading higher than that one. Again, you don't have the that area confirmed on a closing basis, but this is what you kind of, this is very characteristic uh, behavior around a significant low, right? The market just doesn't really give you a lot of opportunity to, you know, well, I shouldn't say that. It does give you a significant opportunity to, you know, get into a position. Price can often hang out around that level for a while, but at the end of the day, you know, a lot of people will have gotten taken out of their position by low time frame volatility, intermediate time frame volatility before the ultimate move takes place. So, anybody who's using heavy leverage in this level, you can see that by the squeezes that have taken place, right? You get the squeeze here, and generally that's what's going to happen, right? You get a close above the range and then run back down. Wouldn't be surprised if you start taking these lows out, these lows out, these lows out as well. Um, Not that I think that's going to happen, but it definitely wouldn't surprise me at all. The name of the game is taking out as many longs as you can before price mounts a rally. Anyway, I hope you guys like this video. If you haven't subscribed to the channel, please make sure to do that. I'll catch you guys.